Good afternoon to members of Perpetual Select Superannuation Fund. My name is Catherine Robson and I'm Chair of Equity Trustees Superannuation Limited, ETSL, the trustee of the fund. On behalf of the trustee board and the senior management team, I'd like to welcome you to the Perpetual Select Superannuation Fund's annual member meeting for the year ending 30 June 2025. I'd first like to acknowledge the traditional owners of the lands on which we meet today and pay respects to elders past and present. Before we commence the formal part of proceedings, I'd like to run through a few housekeeping items regarding today's online meeting. We've scheduled a question and answer session as the last item on the agenda. We have already received questions from some members and we'll be answering those during the meeting. If you have other questions, please submit those during the meeting. To do this, click on the live Q&A button located in the right-hand side of your screen and start typing your questions. The answers to all questions, along with the minutes of this meeting and the recording, will be available on the Fund's website in coming weeks. However, it's important to note that we cannot answer any questions that relate to your personal circumstances in this meeting due to privacy constraints. In this instance, we encourage you to contact the Fund directly. This meeting is being recorded, so if you have any technical issues or you can't stay for the entire meeting, please note that a full recording will be made available to all members within 4 weeks of the meeting on the Fund's website. And finally, information provided in this meeting is of a general nature only and does not consider your personal objectives or take into account your financial situation. If you need assistance, you should either contact the Fund or seek advice from a licensed financial advisor. You can also refer to the product disclosure statement and your most recent annual member statement for further product-related information. Please contact the Fund directly should you need a copy of either of these documents. Today's agenda has the meeting scheduled to run for about 45 minutes. In attendance, we have a quorum of our directors from the trustee board, along with David Warren, the General Manager of Superannuation Services from Equity Trustees, as well as Adam Balsaro, Head of Product and Marketing from Perpetual Private, and Carl Lidbury, Chief Investment Officer at Perpetual Private, and Andrew Reeves from KPMG, the Fund's auditor. The agenda for the meeting includes my opening remarks, after which you'll hear from Adam, who'll provide an overview of the Fund and its key achievements. Carl will then take you through an update on investment markets, including performance and outlook. David will then provide you with the trustees' update and findings of the most recent member outcome assessment. David will hand back to Adam, who will share some of the planned future priorities and initiatives for the Fund. The board, auditor and presenters will then take some member questions and provide answers. Now, turning to my chair's remarks. I'd like to start by sharing some important updates on supervisory and compliance developments that impact trustees and members across the superannuation industry. The first is the Financial Accountability Regime, or FAR, which began in March 2025, which strengthens how trustees, directors, and senior executives are held responsible for their actions. It sets clear standards for governance and conduct so that your fund is managed with strong oversight and transparency. This helps ensure that decisions are made with care and always with members' interest in mind. Another new prudential standard called CPS 230 began in July 2025. It focuses on improving how funds manage operational risk and maintain strong business operations. It also strengthens how we manage third-party service providers, helping to keep services reliable and your information safe. This helps your fund continue to operate effectively and protect your information and savings, even when challenges occur. I'd now like to move to regulatory changes which occurred over the year, beginning with the key rates and thresholds that define our super system. From the 1st of July 2025, the superannuation guarantee reached 12%, completing the final scheduled step of the program that began several years ago. This means that for salary and wages paid after the 1st of July 2025, employers are required to contribute 12% of ordinary time earnings to super. At the same time, the concessional contribution cap remains at $30,000 and the non-concessional cap is $120,000. The bring forward limit is $360,000 depending on eligibility. The general transfer balance cap also increased to $2 million from the 1st of July 2025. For members starting their first retirement income stream after that date, the personal cap is $2 million. However, for members who'd already received an income stream, proportional indexation applies based on how much of the previous cap had been used. While we don't expect to see the superannuation guarantee increase in coming years, the other figures I've mentioned are adjusted annually to ensure that superannuation limits stay in step with inflation. Further, these measures all contribute to the purpose of superannuation, which was enshrined in legislation in November 2024, to preserve savings to deliver income for a dignified retirement alongside government support in an equitable and sustainable way. One of the most positive social developments in recent years has been the introduction of superannuation on government-funded paid parental leave. As of the 1st of July 2025, eligible parents will receive a 12% super contribution paid into their nominated fund. The Australian Tax Office will pay these contributions as a lump sum after the end of the financial year in which the leave was taken. This initiative helps close the gap in super balances between men and women and supports parents who take time away from work to raise their families. Turning to tax settings for very large balances, the government's original plan was to introduce a 30% tax on earnings associated with balances over $3 million from July 2025. However, in October 2025, the government announced changes to that approach. The revised proposal would apply to realised earnings only rather than unrealised gains, and would introduce a tiered balance of 30% for the portion of balances between $3 and $10 million and 40% for balances above $10 million. It is proposed that these thresholds will be indexed, and the proposed start date is now the 1st of July 2026. The measure's not yet been legislated and will keep members informed once the law has been finalised. Another area of focus this year has been payday super. Currently, most employers pay superannuation contributions quarterly, meaning that employees potentially miss out on earnings on super in the period between payday and the end of the quarter. Payday super will require employers to contribute to super every pay cycle, with contributions expected to reach funds within just a few days of payday. Legislation was passed in November 2025, and the commencement date is the 1st of July 2026. The ATO has published implementation guidance to help both employers and funds prepare. These reforms aim to reduce unpaid super and give employees faster visibility of their contributions. As we look beyond these key figures, the focus is also on helping members move smoothly into retirement. The Retirement Income Covenant, which came into effect in 2022, continues to inform the way trustees support members in retirement. Each fund must maintain a clear strategy to help members balance income, risk, and flexibility in retirement. Our fund continues to refine its retirement income strategy and expand the tools, resources, and advice pathways that help members plan with confidence. In addition to the Retirement Income Covenant, the government's other key area of focus is service standards, after it came to light that a number of super funds were not meeting community expectations around the timeliness of death benefit and insurance claims. As a result, the government has announced that it will introduce mandatory service standards for APRA-regulated super funds. These standards set out clear expectations around how funds handle key member services, particularly the timely and compassionate processing of death benefits, the fair and efficient handling of insurance claims, and the delivery of clear, respectful, and accessible communication to members and their families. While it may take a number of years before these standards become law, the expectation is clear. Superannuation is more than just an investment vehicle, and members should be able to expect quality service from their fund. At a system level, cybersecurity continues to be a key area of focus across the superannuation sector. Super funds hold sensitive personal and financial information, which makes them an attractive target for cybercrime. Across the industry, trustees are expected to maintain strong governance, controls, and incident response arrangements to protect member data and assets. Regulators such as APRA and ASIC continue to emphasise the importance of cyber resilience, including system security, third-party risk management, and clear communication with members if incidents occur. Members also play a really important role in protecting their own information by using secure passwords and remaining alert to scams and impersonation attempts. Alongside cybersecurity, artificial intelligence is increasingly being discussed across the financial services industry, including superannuation. At an industry level, AI is generally viewed as a tool that can really assist with data analysis, operational efficiency, and member communications when used appropriately and responsibly. However, regulators have made it clear that the use of AI does not remove trustee accountability and that decisions affecting members must remain fair, explainable, and compliant with the law. As this area continues to evolve, trustees are expected to apply strong governance and risk management to the use of any advanced technology. And it's important to recognise the broader picture of consolidation and growth across the industry. As of June 2025, total Australian superannuation assets reached approximately $4.3 trillion, with around $3 trillion held in APRA-regulated funds such as this fund. The industry continues to merge and consolidate to achieve greater efficiency and scale, which brings benefits for members through reduced costs and improved investment opportunities, while also increasing expectations for governance and service. Before closing, I'd like to remind all members to take the time to regularly review your super. Check your balance, your insurance cover, and your investment settings. If you're planning parental leave, make sure your fund details are up to date. And if you have or expect to reach one of the new proposed thresholds, consider how the proposed tax changes might affect you. For personalised guidance, please contact the fund or seek professional financial advice from a licensed advisor or tax specialist. Thank you for joining us today. I'll now hand you over to Adam Balsaro, Head of Product and Marketing at Perpetual Private, for further information about the fund. Thanks, Adam.
Thank you, Catherine, for that update. I'd now like to take a moment to give you a brief overview of the fund and highlight some key changes over the past year. Looking to the profile of the fund, as at 30 June 2025, it has 3,857 members and $1.14 billion in funds under management. Select Superannuation Fund offers solutions for both the accumulation and pension phases of your retirement journey. For members within the accumulation phase, you have access to life, TPD, and salary continuous insurance cover through the fund's insurer, AIA Australia. From a member investment perspective, the fund aims to make it easy for you to create and manage a portfolio that meets your specific investment objectives and helps you to meet your retirement goals on your journey from employment through to retirement. Select's 8 member investment options combine a wide range of asset classes and specialist investment expertise of managers from across the globe. Currently, there are 19 investment managers looking after the fund's assets. Lastly, the promoter of the fund is Perpetual Trustee Company Limited, and we work closely with the fund's service providers and the trustee to deliver the best possible outcomes for our members. Providing a member experience that meets the requirements of our members is one of our key strategic objectives. A lot was accomplished last year to ensure we're continuously able to deliver on that strategic objective now and in the future. Perpetual Superannuation Limited retired as trustee of the fund, and Equity Trustees Superannuation Limited, or ETSL, was appointed as the new trustee of the fund, with effect from 1 March 2025. Perpetual Superannuation Limited's decision to retire as trustee and appoint ETSL as trustee followed a comprehensive review and was made after considering the best financial interests of our members. The decision is aimed at leveraging the specialist expertise and extensive resources of ETSL, which is one of Australia's largest specialist superannuation trustee companies. Perpetual, through Perpetual Trustee Company Limited, continues to provide specialist investment management services to the fund. In addition, Perpetual, through Perpetual Investment Management Limited, continues to provide administration services while the safe custody of assets continues to be held by a specialist custodian on behalf of members. Between 6 May 2025 and 13 May 2025, the fund transitioned registry services to new external provider, MUFG Retirement Solutions, or MUFG. Given we were approaching the end of our arrangement with the existing external registry service provider, a comprehensive review and due diligence process was undertaken to ensure we had a fit-for-purpose solution for our members for the long term. MUFG is a leading global financial services group providing a range of investment and administrative solutions for clients across the globe. We aim to provide the best possible outcomes and experience for our members. And while we acknowledge this change was initially disruptive, it was a crucial step to ensure we continue to provide a quality member experience into the future. As a result of the transition to MUFG as our registry service provider, members now have access to the Perpetual Select member portal. We encourage you to register for this portal if you have not already done so, thereby allowing you to experience all the benefits of our new registry service. If you require assistance with the registration process, please contact Member Services on 1800 677 442. I would like to note that our members continuously express interest in information about the latest developments in financial markets and the economy. In 2024, we introduced regular quarterly market update reports, which are delivered to our members via email. These reports provide insights into financial markets and economy-related topics. If you currently do not receive the quarterly market update report and wish to receive it in the future, please reach out to our contact centre to update your marketing preferences. I encourage you to have a look at the quarterly market updates as you might find them useful and interesting. On that note, I'll now hand over to Kyle Lidbury, who will provide markets and economics updates for the financial year 2025.
Thanks, Adam, and good afternoon, everyone. My name is Kyle Lidbury, and I am the Chief Investment Officer at Perpetual Private. Today, I will take you through how investment markets performed during the 2025 financial year, the major themes driving returns, and how our select superannuation fund performed, including an update on APRA's Your Future, Your Super test, as reported in the APRA Comprehensive Product Performance Package. FY25 proved remarkably resilient. As the chart shows, every major asset class delivered positive returns. Both global and Australian markets delivered strong results, despite ongoing economic uncertainty and fluctuating investor sentiment. The year highlighted the importance of resilience, diversification, and a long-term approach to investing. Once again, international equities outperformed, delivering 18.3% for the 12 months to June, as measured by the MSCI All Country World Index. However, if you look at the effect of the weakening Australian dollar over the year, returns in local currencies were 13.3%, bringing this more in line with the 13.7% delivered by the broader Australian equity market, as measured by the S&P ASX 300 Index. Real estate investment trusts, or REITs, which predominantly hold high-quality core real estate exposures, continue to recover strongly after weak returns in previous years, with both Australian and global REITs returning over 13% for the 12 months to June, although global REITs also benefited from currency effects. If your exposure to global REITs had been hedged to foreign currency, the return would have been closer to 8% for the year. Bond investors are enjoying real yields on this asset class after unusual negative returns over preceding years. Global bonds, hedged to the Australian dollar, returned 5.4%, whilst Australian bonds returned 6.8% for the financial year. Credit outperformed both benchmarks broadly, keeping in mind that this is predominantly a floating rate sector, as well as exposed to corporates' performance, making credit a less diversifying asset class compared to US Treasuries and other high-quality sovereign bond issues. Cash investments provided stable and predictable returns of 4.4% for the year. With interest rates at their highest levels in several years, cash continued to play an important role as a defensive and low volatility asset within diversified portfolios. Whilst international shares outperformed all other asset classes, it's worth unpacking what's going on underneath the headline numbers. A group of stocks known as the Magnificent Seven, being Apple, Microsoft, Alphabet, Tesla, Nvidia, Meta, and Amazon, have dominated US returns to make up over a third of the S&P 500 index, representing the top 500 companies in the US market. The US market also dominates global equity market returns, with the US now making up over 60% of global markets, even when including emerging markets, which now make up just 10 to 11% of the global index. It's worth noting that these companies are all part of a global artificial intelligence and technology theme that have driven these stocks to extraordinarily high valuations. The cash flows and profits that these companies generate are significant. However, the amount of capital expenditure on artificial intelligence is unprecedented. This is new territory for these companies, as one of the characteristics that made them so valuable was the low amount of capital required to generate their large profits. The AI theme has effectively upended this model, and it's unlikely that the entire amount of capex in this sector will be able to be justified by future profits. It wouldn't take much of an erosion in these very optimistic projections for share prices to be impacted, and we have seen some small signs already of the market starting to question the dynamic with periodic sell-offs in a few of these companies. What does this mean for investors? Effectively, whilst returns in international equities have been impressive, it's also worth knowing that it's been basically a single theme driving the majority of these returns. Any risks to this thematic and subsequent adjustment in markets will make it very unlikely that international equities as a sector can continue to deliver these high returns. This slide shows the performance of our multi-asset diversified portfolios and our single sleeve options over 1, 3, 5, 7, and 10-year periods, compared to the relevant select option benchmark. The most important point is that absolute returns have been very strong, especially over the 1 and 3-year periods. Members' accounts have grown meaningfully, which is the most important outcome for meeting long-term retirement goals. Relative performance, however, has been challenged due to extremely narrow market leadership. In this environment, diversified portfolios naturally lag the concentrated benchmarks, and has been the case with our portfolios. In the Australian equity sleeve of the multi-asset funds, Cooper Investors was the main detractor of returns over FY25. Stock-specific issues in HMC, Iluka, CSL, Ramsay, and Lend-Lease weighed on performance, and the portfolio's underweight to major banks, particularly Commonwealth Bank, was a significant headwind. Broader positioning remained underweight large caps and overweight small and mid caps, which also struggled in a higher rate environment. In international equities, the narrow dominance of the Magnificent Seven made outperformance difficult. We strengthened our core sleeve by adding Man Numeric to increase large cap exposure, and more recently, we've added Lazard Global Equity Advantage for better diversification and tighter risk control. Pleasingly, we have seen a broadening of returns since the December quarter. Alternatives detracted modestly, which is not surprising in a market driven by a handful of large cap equities, and they remain an important tool for diversification and capital protection. Bringing it together, absolute returns are strong, relative returns have been pressured by concentration, and our diversified approach remains appropriate for long-term outcomes. At the bottom of the slide, we have shown the Your Future, Your Super results for the Balanced Select Super investment option. The test measures long-term performance and fee competitiveness. Our representative administration fee is 0.1%, well below the benchmark of 0.24%. Pleasingly, all multi-asset select super options passed the test. So, what's the outlook for the investment market? Economies globally are generally healthy, with low levels of unemployment and delivering growth, albeit some economies and sectors are starting to slow. This can be seen in softening labour statistics and lower numbers of jobs being created versus recent experience. That being said, it's not all bad news as inflation in most parts of the world appears under control, which will allow central banks, such as the US Fed, to prioritise stimulating jobs growth by lowering interest rates. This should be positive for markets. That being said, the ride could be a little bit more wild next year, with some key policy decisions to take place over 2026. This includes nomination of a new Fed chair, US midterm elections, and continued weakness in some large economies in Europe, which are still recalibrating their economies in a post-Liberation Day world. Any tick up in inflation could prove worrisome, especially against the backdrop of softening employment, which could possibly lead to a stagflationary scenario. However, it's important to note that this scenario is not in our base case of assumptions for this year. As we've already outlined, increased market concentration in a few companies and a single theme is worrisome for investors. Whilst they've underperformed passive funds for a number of years now, active managers may have a role to play in creating more resilient portfolios by being able to diversify away from pockets of concentration or single market themes or geographies. Superannuation is a long-term investment vehicle, making diversification key to managing volatility of portfolios through time. Thank you. And I'll now hand you to David Warren, General Manager, Superannuation Services at Equity Trustees.
Thank you, Adam, for the fund update and importantly for the achievements and benefits delivered for members in the past year. And also thank you to Kyle for that comprehensive update on the investment market and fund performance and outlook. So now I'd like to share some important updates on the Retirement Income Covenant and share with you the results of the most recent member outcome assessments undertaken. So the Retirement Income Covenant continues to guide how funds support members who are moving into retirement. In June 2025, APRA and ASIC collected data on the retirement phase, and they are now encouraging funds to take faster action to make sure members are well supported as they retire. So the covenant requires funds to do three things. Firstly, help members maximise their expected retirement income so they can have the highest possible income throughout retirement. Help members manage risks to the sustainability and stability of their income, including the risk of outliving their savings or changes in the market. And to provide flexible access to funds so members can choose how and when to use their money during retirement. The introduction of the Retirement Covenant aims to help funds better understand members' retirement needs. It also helps members plan, prepare, and feel more confident about their retirement. As part of meeting this covenant, your fund has published a retirement income strategy, and we encourage all members to read it and to understand how it can support you in preparing for retirement. And over time, the fund will make available tools, resources, and support to help you identify your retirement needs and know where to find help. This may include education materials, reminders to review your super key milestone birthdays, or professional advice for a more detailed plan. Everyone's idea of retirement is different. Living your ideal lifestyle in retirement requires planning, and taking time to plan can make a big difference in helping you feel confident and financially ready for your retirement. Looking now at member outcomes, each year we complete a member outcomes assessment to provide transparency on how the fund's products are performing and whether they continue to operate in members' best interests. The last assessment was completed in the 2024 financial year under the fund's prior trustee, Perpetual Superannuation Limited, and we are currently finalising the 2025 member outcomes assessments for the fund, which will be published in March. The member outcome assessments consider a broad range of product attributes, including investment risk and return, fees and costs, insurance claims management, member engagement, scale, and an overall product assessment rating. And using a rating scale, the assessments provide the trustee's perspective on how each product compares with similar products in the market. All current assessments are published on the fund's website to ensure transparency and support members in understanding their superannuation arrangements. From the trustee's perspective, these assessments provide an important opportunity to evaluate the sustainability of the fund and the outcomes being achieved for members. And for members, the assessments offer relevant information to consider in relation to their superannuation savings. In the most recent review, the prior trustee completed a total of 12 assessments across the two products. And of these assessments, 10 outcomes met or exceeded the prior trustee's target levels, but 2 outcomes were below target, but remained within the prior trustees' tolerance level. There were no outcomes assessed as being outside of the prior trustees' tolerance levels. Overall, all assessed outcomes were determined to be within the prior trustees' tolerance and continue to be suitable for members. And while the trustee and Perpetual perform different roles, the partnership is underpinned by a shared alignment in serving you, our members, in delivering the best possible retirement outcomes. And with that, I'll hand back to Adam, who will share an update on what we can expect in the year ahead for the fund, and then we'll finish off with some questions and answers. Over to you, Adam.
Thanks, David. During the financial year ended 2025, we completed many major strategic projects for the fund. Whilst we have successfully addressed the immediate strategic tasks, we're committed to continuous improvement. In the current financial year, we're already working through quite a few initiatives to improve our members' experience and members' outcomes. I'll now take you through 4 of the key focus areas for the year. We're currently undertaking a comprehensive review of our member services to identify opportunity to enhance our offerings. This includes exploring ways to leverage technology to streamline processes and provide a more personalised member experience with our new registry service provider, MUFG. We're enhancing our investment offerings. In the upcoming year, we're planning to undertake a strategic review of our investment offering to ensure that our fund's investment options are effectively aligned with our protect and grow investment philosophy. We are continuously looking to enhance our investment offerings, and we will continue doing so in the upcoming year. We also continue to focus on and implement regulatory requirements. Superannuation is a highly regulated industry, and we're continuously enhancing our products in line with the latest regulatory changes. There are several regulatory changes anticipated for the superannuation industry in the upcoming year, and will ensure that the fund is well positioned to accommodate any new changes. And finally, we're reviewing and simplifying the product structure. The trustee and Perpetual are focused on the sound and prudent management of the fund's operations. A key strategic objective for us is to implement a sustainability strategy. We continuously review the fund structure, looking for opportunities to rationalise underutilised investment options and improve efficiency by simplifying the product structure. We will keep our members informed about any upcoming changes in due course to ensure that our members' interests are continually promoted. Wherever you are on your superannuation journey, we're here to help you achieve your retirement income goals now and in the future. Thank you very much for entrusting us with your retirement savings, and thank you for joining us today. I'll now hand back to David Warren.
Thanks, Adam. So that's the end of our formal presentations today, but it leaves us some time to move into a question and answer session. And this is an opportunity for us to address some of the common questions we received from members, covering topics such as investments and risk management and how the trustee supports members in key areas. Please note that we are unable to answer any questions that relate to a member's personal account details or circumstances for privacy reasons. So first question, does the Shield and First Guardian matters impact upon our fund? So we understand reading about situations like Shield and First Guardian can create concerns for members, but there is no impact to your fund from these matters with either the day-to-day operations or the services we provide to you as the trustee of the fund. We appreciate this situation has been deeply challenging for those affected. We have clear ideas for regulatory reform, and we are working with the key industry bodies and the regulators. We are respectful of the ongoing regulatory examination of the issues. We remain deeply committed to supporting them to have robust confidence in the superannuation system. The ETSL board is committed to acting in the best financial interests of members and takes its compliance obligations seriously. Okay, next question. What is the trustee's view on the investment market outlook given growing global uncertainty? So investment markets continue to operate in an environment influenced by economic uncertainty, inflation, and interest rate changes, geopolitical tensions, and ongoing technological change. These factors can contribute to periods of heightened volatility and short-term fluctuations in asset prices. The trustee acknowledges that an uncertainty is a normal feature of investment markets and that outcomes cannot be predicted with certainty. Superannuation is typically a long-term investment, often spanning decades. While short-term market movements can affect account balances from time to time, the trustee's approach is designed to support members' long-term retirement outcomes rather than react to day-to-day market changes. This involves offering a range of investment options with different risk and return characteristics and maintaining diversified portfolios across asset classes, regions, and sectors. Again, members are encouraged to consider their individual circumstances and to seek professional financial advice if you're unsure. Okay, our next question. What's the trustee doing to ensure that claims are managed and paid efficiently for members? And it's very topical. The trustee places a strong emphasis on the fair, timely, and consistent management of claims. Claims processes are designed to operate in accordance with the relevant trust deed, policy terms, and legal and regulatory requirements, while also recognising the importance of clear communication with members throughout the process. The trustee oversees claims governance and works with administrators, insurers, and service providers to support efficient claims assessment and decision-making. Performance and service standards are monitored and processes are reviewed periodically to identify opportunities for improvement. Okay, our last question for today. How does the trustee view speculative investments such as gold, silver, and emerging technology such as AI? And what steps does the trustee take to manage and limit exposure to these types of investments? The trustee recognises that assets often described as speculative, such as certain commodities or emerging technology-related investments, can play a role within diversified portfolios, but they also carry higher levels of uncertainty and volatility. These investments can be sensitive to market sentiment, valuation changes, and rapid shifts in economic or regulatory conditions. The trustee has limits on the percentage of a portfolio that can be allocated to a single investment or asset class in order to provide some measure of protection. However, true protection comes from a properly constructed and diversified portfolio. Members are encouraged to consider their individual time horizon, risk tolerance, and retirement goals when choosing investment options and to seek professional financial advice if unsure. Thank you. That's all the questions we'll address in the meeting this afternoon. We respond to all questions that were raised, including those covered today, and include responses in the minutes of the meeting. We sincerely thank members for their questions. And now I'd like to hand you back to Catherine for her final remarks and to close the meeting. Thank you, Catherine.
Thanks, David. And thank you for your time and attendance today. We hope that you found this meeting both useful and informative. As David's mentioned, a video of this meeting minutes, and written responses to all the questions raised, including those which we've not responded to today, will be available on the Fund's website within 4 weeks of the meeting. Thank you, and wishing you a wonderful day. Goodbye.